Good evening. We do a end of day review for SPY price action analysis this evening. Today is Monday, the first trading day of the week, and this week is the third trading week of July. So it's a OPEC week, which is a option exploration week. So there's some factor that we need to check in for the price action this week. So as we review today, we kind of surprised. We thought they're gonna sell off, right? Because we see that the VIX is the 3-month VIX is jumped to 1.2, which is a signal for bearish sell, but actually it keep going up. Every time we try to short. So this morning we see, wow, we see the auto block right there, and we see that, oh, fair value gap. So the retest we short, we got stop out. The same idea right here. We see a auto block right here and a fair value gap. We try to short them, it stopped out. It keep moving up. Then we patiently say, oh wow, we wait for this moment, right? 10:08, we get time of interest right there, and and the beautiful thing is the buy sell liquidity taken, so it's fit into our setup, and we saw the fair value gap right there. We try to short again when it retest right here 10:15 or 10:16, and you know what, we got stop out again and buy sell liquidity taken. And right here we have another nice setup. We see this auto block, fair value gap, and this retest. So we try to short again at 11, the beginning of 11 hour, and you know what happened? We got stopped out again, and it kept going up. It's kind of crazy, right? I mean, the market is always surprise us, and that means we have to change our mindset, because we thought it must go down, but it not. So we have to somehow change our mindset so we're in sync with the markets. Look at the same right here. We see this is a 1 minute time frame, right? And then right here we thought we have a setup right here. Look at the 5-minute time frame, we can see more. So we saw, wow, this bearish auto block, and you see the breaking down further gap. So it retests them, so we short them at 13:05 and short them again at 13:40. But it's, you know what, it take it out again, and it take buy sell liquidity out right there. That is kind of frustrated if we keep shorting and we keep losing right there. So that is our bias, and that's a mindset for our plan this morning, but it didn't plan out. But the good thing that we haven't taken any trade. All of that we just do exercise. We do a so-called testing trade. We don't really take a real trade at all. So that make us rethink our approach. So then we go back and see why we do that, why we try to short the market, what it going up, what we failed to see at the beginning. So when I look back, I see that we failed to see this kind of signal, or this kind of very easy to ignore them. Okay, so here this level we have the prior day low, right? It's prior day high. Let's look at the 4-hour time frame so we can see better. We can have a better picture, or on a 4-hour or 4-hour or 1 hour. Let's look at 1 hour time frame. I think 1 hour also have give it a better picture. You see the low of Friday, right? Prior day, and it take out that low. You see, it take out that low, that's a sell liquidity, but it never close below that. That give you a bullish signal right there. And then it create a equal low at 8 o'clock right there. So it tell you something that it's gonna be go up, right? That's the signal of the setup, sell liquidity, and it fell to close below that, and it start going up. Then it gives you the signal it's gonna be bullish for today. And then if it's bullish for today, then your target gonna be, I mean, at least this order block level right here. That's your target. And another target will be the buy side liquidity right here, which is the Friday high right there. So somehow we failed to see this, you know, setup. We just try to go in and try to short them. So that's called confirmation buyout right there. Somehow we just try to enforce our view or our, you know, perspective on the price action, and it did not work out. So we have to step back and see what are signal, right? So what are probably right here, if we just play the trade right here at the level, you know, we will have a very nice setup and risk, you know, very high risk reward right there. You put a stop, even you put a entry right there here, and you know, 10 or 20 cent below this, and your target right here. So we have a good risk reward ratio right there. Let me see, what is the is this $1 move? Yeah, it's more than $1 move, $2 move. You got 20 cent right there. It's 20 cent and you get only $2, so it's 1 to 10 risk reward ratio right there. Okay, so, and you can see that it start just below the new wick opening gap and start going up right there. It give us some signal right there, and we fail to see this. That's the reason why we try to short the market, and we keep, you know, get stop out, frustrated, losing. So that's the lesson learned for right there. What else we want to see? Let's see. So if we gonna entry right here, is pre-market, it's a very hard entry, right? What if you enter at 9:30? Then let's look at the 1 minute time frame. How do we entry? Yes, the 1 minute right here gives you a big failure gap right here, right? You have what? You have a huge failure gap and retest right there. So you can put the retest right here. You can entry at 9:45 for your long setup right there. So it's a fair value gap. So what you call it then? So this will be a what? This will be a bullish breaker, right? You can call it a bullish breaker. Let's look at 5 minute time frame to see if we have a better setup. Yeah, I think 5 minutes gives you a better setup, I believe. Yeah, I think I did do that. Let's look at a screenshot. We check here, the screenshot we check. No, it's too late. We want a little bit early, so let's see. Short setup, long setup. Yeah, at 9:45 we have a entry. You see, this is, we treat this at a bullish breaker, right? At 9:45 you see fair value gap, You see fair value gap right here, fair value gap right here, and then it retests that fair value gap. So we have a nice entry on M5 at 9:45. Right, 9:45 entry time. Hmm, 9:45. How about on M1? Okay, on 1 minute we have, yeah, we're also at 9:45. You see right there. Man. So what's it, the low of this one? 44913. What is the high of this one, or the close? 13 exactly. You see, so put your entry right here and then your stop there. You have perfect entry right there. Man, that's beautiful. So M5 give you the entry, also M1. So beautiful right here. We failed to see that. So this is a lesson learned for it. It's the feedback first. So we keep improve our system. What our system is our eye to see the setup and remove the confirmation bias. Somehow we have to improve that and remove that. So that is our system that we try to build. So it's a breaker, fair value gap, you see, and retest them. And this is a long setup. Right. Yeah, we have a buy side liquidity, which is previous day low were rated. Yes. And then oh, the target will be what? I think it's 1 hour auto block or previous day. Alright, right there. Yes. Yeah, I did put a note right here. We failed to identify the sell side or pivot day low rated, and another thing is create equal low in pre-market. You see the equal low? Yep, that's equal low right here. Look at the 1 hour time frame. We can see the equal low, so that can tell you something right there. See that there? It rated the sell side and it created equal low right here, just 1 cent different. Yeah, so replace equal low right there, right? I think this one is 24 and this one is 25, so just 1 cent different higher, so it make a higher low right there, so it's signal for you is it be bullish right there, right? After you check the sell side liquidity, make a higher low, and boom, you going or equal low. Wow, that's a beautiful setup. So after I erase the sell side liquidity, make a equal low or equal low or what, or higher low. That's the signal for you to go in and go long. Yes, that setup, that the condition we learned for today. Instead of trying to force our confirmation bias on the market. So right here, you say that, I mean, let's try to see how it play out for yesterday. But now we can see the signal of the bearish right there. So if we try to short, don't try to short too soon on Monday. You need to short a little bit later. You see, at 15 o'clock you can short them. You see the buy side liquidity checking. You see, a very long wick, that can tell you right there. And this is the high previous day high right there. All right. So let's take a look at the daily time frame to see how we anticipate. Let's see what the stack for today. So today we will have 17, right? So it's a close day, you see right there. Like this we delete some days, clear out something real quick. Okay, so what is this? This one's overlap, this one. You see, we still have a gap right here. Not, you know, so-called gap, volume, you know, imply fair gap right there. So we are Q3 right now and week 29, and day of the year 198, and it's Monday. So that's the stack for us right there. So 198, week 29, right? Week 29. So what a huge gap right here. So we believe that this week gonna come down, fill this gap. I mean, that's what we expect, you know. And also there are a bullish breaker right here, so it's gonna be revisited right there. And at the end of today, give us some signal right here. You see, huge rejection. As soon as it take out the buy side liquidity, it came down. It's close right away, come down and close below that. And remember, this is the bullish breaker. Is supposed to be stay up there, but it's no. So it's still a valid order block right there. So it's still, this is a so-called order block right there, a bearish order block, also called the supply zone, supply level right there. Yeah, let's see how it's playing out tomorrow. And remember, it's above the new week opening gap. So for a bearish week, we wanted to open Monday above new week opening gap, and it come down the week opening gap and come up a little bit, retest them, and then come down from there. So here's our buyer, our scenario right here. Okay, So we wanted to go here, take out liquidity, right? And go here, go down, break this, or just break the high, the low of the, the new week opening gap, and it come up here. It act like it's gonna be, set up a bull trap, and then from there coming down. So that is our what? Our theory right there. And just for the gap, or it can come down to this level, right? I think this error around here, at least that error, because you have a order block, and then you have a bullish breaker, a bullish order block. So you see this order block valid, so it will may retest the order block again, and you can see that had a huge no gap, just a little bit gap right here, or implied failure gap right there. You can see it right there. It may go to the third wall also. So that is our anticipate right there. Let's see how it's pan out. So just leave it there for now. So tomorrow, when we wake up, see how it's play out first. Okay, take a look at the VIX. Where are VIX? Yeah, it go up 1.2 again. When it's above 1.2, it should be bearish right there. Let's see the VIX. Now the VIX by itself will not make a huge jump at all, so kind of very strange. It's 1378 and close at 1348. Wow, it dropped VIX by itself. Okay, so what are we? The uptrend day. So the uptrend day. So what's the volume for today then? You see the volume for today, 69, cup low, right? But not really terrible lows. 815, 823. So the average for the last 60 days is 79. So it's about 10 million share less. Not bad. So okay. So let's see how is I want to see the SPY. Okay, so what? So today increase $1, which is equivalent to 0.35%. All right, we record that percent. Okay. And now we go to the skew. Okay, wow, it give us something going on right there. You see the skew is drop. That means people not gonna buy insurance for they're not buying insurance. That means they're not buying the stock, because when they buy the stock, they're gonna buy a put to hedge their position, hedge their long position. But in this case, they don't hedge it. That means they're not buying it. They sell it. So that can give you some signal right there, signal for bearish sentiment in the market right there. It dropped, wow, it dropped very significant right there, 7-point drop. Oh, wow, that's huge. So get ready to short, guy. Okay, I now look at the DR, right? The DR for sale, DR. I mean, DR, you know, play out really well. You see right there? We have the confirmation right here and reach retest, and it go up to reach, you know, to reach what? To reach one standard deviation, and it's reach more than one standard deviation. Let's see. Okay. So one standard, so it reach 3 standard deviation. No, I mean 1.5 or 2. Every 2 standard deviation. Wow, that beautiful moves for anyone who uses the DR model right there. So far, it's very reliable model. Yeah, so our task right now, we try to incorporate both ICT concept and DR model, so it gives us a more, you know, high probability setup right there. Huge. See order favorite got up right there, give a signal that it's gonna go up. Okay, so we'll take this screenshot for the R model. So it's for now. So the DR have a substantial move to the upside. I think 2.5 standard deviation up move. So beautiful. And what else we need to recover here? You see. And the time of interest, I think, is 9:30. No, 9:45. So what else we need to cover? We have about 2 more minutes, so let's see. I mean, take a look at the weekly. We see what's going on right here. Weekly. So it opened just below the last week close, but then it go up. It take the buy side liquidity. Let's see. So we can see as long as it go down the new week opening gap and it retest that, we know get ready and short them, right? And short them. I think at least from the weekly you can see it's gonna test it right here. That's our anticipation right there on the weekly time frame. Okay, let's look at the monthly to see we see anything else. Monthly or July, still good. So July normally high and range is about 10 points so far, but we have 14 points so far, so it's above the average range. So that's huge right there, huge signal. The reason why I move up today because it's the earnings season, July, right? We have January, April, July, and October. That's the earnings season, and so far they have a positive news. That's why I keep going up. Let's see. All right, I think that's for today, and thank you, and talk to you guys later. Bye for now.